Good morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I am delighted again to be joined by Tom Hibbert, our Chief Investment Strategist.
Welcome back from holiday.
Thank you. Yeah, it's good to be here. And I'm very pleased to say that Tom has got his England cufflinks in today, ready for the match later on this week. So
I don't watch the football, but I'll
I know.
support it.
Yeah,
with
but
my
I
cufflinks.
do. And so good luck to England. That's what I say. Okay, so this week, we are not trying to demystify what's going on in the World Cup. We are indeed trying to look at what's going on in the markets. And then hopefully you can feel more informed, confident, and in control of your financial future. So at the last week, Tom, it seems to have been a bit of a bumpy ride for equities, particularly in tech.
We're talking about ants today, aren't we?
We're talking about ants. We are talking about ants. Yeah, I didn't know what ants were before. Well, I knew what ants were, but not ants in context of investing before today. But the market fundamentals still look strong, but parts of the market are starting to behave differently, which is where the ants come in.
Yeah, look a bit frothy.
A bit
perhaps.
frothy.
We've spoken about this before,
yeah.
haven't we? There's areas of froth.
And I think generally things have been driven by genuine earnings growth, but we are looking at the froth and why that is happening.
The clearest example is Korea.
South Korea.
Exactly.
Okay, so let's get into that in a little bit more detail. So has everybody got their coffee? Let's dive on in and see what is going on. So you mentioned South Korea.
Yes.
Where retail investors are known as ants. So go on, why is this and what does it mean?
I think it's because they behave a little bit like ants, as do retail investors everywhere. But it's the term in Korea for that they use to describe South Korean retail traders. It's a country where retail trading is a huge part of the culture. And
Right.
that has become just expanded massively in recent months. There are over 14 million individual investors.
Yeah.
So it now represents about a third of the country's daily stock trading volume. And they are significantly influeing the market.
So they sort of all act collectively, which is why they're called ants, is it?
Exactly.
Yeah, okay.
Exactly.
Yeah. So what have they recently swarmed into then?
Well, they have, like everywhere else, they're buying into the tech and AI rally.
Yeah.
And there are two companies in South Korea that manufacture semiconductor manufacturing chips. Samsung and SK Hynix, and they in particular have become a huge influence in the Korean stock market and are very popular with those retail traders.
Okay.
So to put that into perspective,
yeah.
SK Hynix shares have surged over 1,700% in just over a year.
Wow, okay.
Samsung's are up about 600%.
Huge, both of them then.
Massive return. Extraordinary level of concentration now as well, because they've grown so much that they now make up over 3/4 of the Korean market, the Korean equity index.
Two companies making up 3/4 of the stock market.
Exactly.
That's a bit bonkers, eh?
Exactly.
Extraordinary level of concentration, I'm guessing. Therefore, is that risky?
Yeah, it's risky, and it's risky because retail investors they're not just buying the companies, they are almost treating it like gambling. So one of the ways that has, in the last couple of months, the Korean watchdog has approved the use of leveraged ETFs.
Okay.
Which
Whoa.
Well, I'll explain
ETFs.
It.
Go on. Yeah.
Yeah. So a leveraged ETF is just you can, instead of buying the shares in the company, you buy an exchange traded fund, an ETF, that gives you exposure to the company. It's a single stock ETF, so it just gives you exposure to that company, but with 2 times leverage.
Okay.
So if the stock price is up 10% on a single day, you would get twice that return.
Right.
You make 20%. If the share price falls 20%, you would lose 40%.
Wow. Okay.
So basically, the ETFs that borrow and then buy twice as much, are twice as sensitive to the share price.
So really turning up the volume.
Really turning up the volume. And these leveraged ETFs have become incredibly popular. And it's influencing the market now. It's creating a lot of volatility. And
so for example, the SK Hynix leveraged ETF.
Yeah.
How much is in that?
It's swelled to $10 billion. And we've seen at the end of May another 16 similar single stock products linked to chip makers were launched in Korea. So there's a massive swelling popularity within these ants in Korea towards these products. But this month, because we've obviously seen weakness within global technology stocks, that has caused some of the liquidity to break down in these products. So you have big divergences between the product performance within the ETFs and the actual underlying stock return. So you've had, and also just the other thing that it's created is massive volatility in the Korean stock market. So you see daily moves plus or minus 10% for some of these two companies, for SK Hynix and Samsung, but also for the index as a whole, because they make up 3/4 of the index. So the Korean stock market has gone a bit haywire. On Friday last week, we've seen, because we've got this June swoon at the moment, Hynix stock fell 17% in a little over a trading session midweek last week. And then on Friday, it was falling sharply again. The Korean stock exchange fell 9% shortly after the open, and then they had to halt trading on the Korean stock exchange.
Okay, so pretty serious.
Pretty serious. Frenzy and a lot of froth.
An ant frenzy.
Exactly.
Okay. Is this an early warning sign for broader global markets, or just sort of a pocket of local excess, I guess?
There are pockets of excess in other areas as well.
Yeah.
But
it's amplified here because of the structure.
Because of the structure, exactly. And look, I mean, I think if you zoom out and you say there are specific problems there.
Yeah.
But we are amidst a lot of exuberance around technology that is now, that has come off the boil a little bit in June, this June swoon. And that's driven by two fears. One, we spoke about last week, the increased fears around US inflation.
Yeah,
and
we're talking about the US economy running a bit hot.
Exactly. Yeah. And we have seen Tim Cook come out and say that he's hiked prices at Apple. Microsoft followed suit last week. So we're seeing more evidence of, that's driven by the crazy demand for DRAM, for memory. And it's more evidence that the AI build-out is putting upward pressure on prices, creating inflation.
It's creating inflation. And that's primarily in the US, but I guess can spread.
Yeah, and it's unsettling the tech rally globally.
Yeah. So what's the other reason for the June swoon?
The others is simply positioning. If you've had really strong equity market performance, it's very reasonable for, positioning becomes stretched. It's reasonable for there to be a little bit of a period of a reset and a normalization.
Okay.
And I think actually that is healthy. And for some of that froth to come out of the market, and it makes the rally more sustainable. And investors are now sitting back and saying, okay, we've had a period of seriously strong performance, and now there's a little bit of weakness. Let's reset and let's look at what's happening within the tech sector and within AI. And that, I think, there's now this recognition, or more of an obvious realization, that the AI cycle hinges on one specific thing, which is end user demand.
So you services, and me
using the large language models and
big
exactly, and all of the other companies that might use them, and the revenue forecasts that companies like Anthropic and OpenAI have made, because they've made huge commitments to buy compute from the hyperscalers.
Okay, buy compute from the hyperscalers. I saw that in the weekly markets review, and I needed you to explain it to me.
Yep, sure. So AI services use a huge amount of compute, and they buy that compute.
Compute meaning the processing power behind AI, so the infrastructure.
Exactly. Okay, and the compute is being built out by the hyperscalers, which are building huge data centers, massive mega cap technology companies like Microsoft. Amazon. Building data center build out that rely on the revenue of AI companies to buy that compute off them. And the AI companies have huge commitments to buy compute off the hyperscalers. The hyperscalers are investing huge amounts in the AI infrastructure. But it all depends on the AI companies' revenue for being able to generate the revenue that they think they'll be able to generate.
From the end users.
From the end users. And that means that are they going to be able to charge their customers what they think they're going to be able to charge them? And the whole AI cycle falls apart if those revenue forecasts are wrong.
Yeah. Okay.
And we've had a look at the forecasts that they're making, and they're not unrealistic. They're optimistic, but they're not necessarily unrealistic. But it does fundamentally all hinge on this being true. And it's why I think, if you have a cheaper AI like DeepSeek in China that can undercut the developed market, the Anthropic and OpenAI, those revenue forecasts could quite easily come under pressure.
Okay.
And that's why I don't think the DeepSeek question's been fully answered. I also think it's why the next wave of the AI build-out might be focused on the efficiency of compute. If you bring the cost of compute down, then the mathematics for the whole AI cycle becomes much easier to
so it's that whole ecosystem that's so fully interlinked, isn't it? And I guess if demand disappoints, if end users are not prepared to pay for the AI or sufficiently pay the price that they're looking for, then that's going to ripple all the way through that entire chain.
Exactly.
Yeah. Okay. We've covered a lot then today, ants and AI. So let's have a little look what's in my Canaccord Takeaway coffee cup. We've talked about the whole AI ecosystem, from AI companies to cloud providers to chip makers. And we discussed that if end user demand disappoints, then that ripple does go all the way through. And hence, probably why we're seeing a little bit of froth taken off the top as some of that reality check comes in.
I think so.
I was interested to hear what's going on in South Korea. Did not know anything about that market at all. But obviously I've heard of Samsung before, but two massive chip manufacturers are representing kind of a localized market issue there, but maybe indicative of some other areas just of volatility. And as we've said before, we think AI remains a powerful long-term trend, but when enthusiasm, rather like the Korean ants, runs ahead of reality, then markets do pause, reset, refocus on the fundamentals. A reminder that even strong markets, they don't move in straight lines.
That's exactly right.
Like ants. So thank you very much. Thanks for listening to the coffee break today. Hope you've enjoyed it. Don't forget to hit follow on your preferred podcast channel of choice and you will never miss an episode. And as ever, we'd love to hear your thoughts. The email is coffeebreak@canaccord.com. Do drop us a line. Many thanks.
Thanks very much for listening.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.